What's up, Marines? I'm Andrew Candela.
And I'm Otto Espino.
Welcome to the exchange.
All right, Andrew, let's get into national markets. Dow, barely up, 0.04%.
Yep.
S&P, NASDAQ, both down. NASDAQ has been taking a lot of hits recently.
Yes.
So far, they've been leading the market with these losses. So not too pretty for tech. The Russell 2000 up 0.35%, so a little bit of optimism there. And the VIX up about 1%. So overall, pretty steady, but still in the red a little bit.
Yeah, whatever.
Yeah, and global, London they're down 0.12%, and Hong Kong is down about 1%. So, like I said, nothing crazy.
Just a nice boring day.
It's better to be nice and calm than massive waves and massive emotion. Just very chill this entire week. Hopefully, it'll stay like that.
Yeah.
But let's get into news. So, like I said, markets are looking steady, but the 10-year Treasury yield has finally rose above 1.94%, and this is not too good. Usually, this is a bearish signal, and we haven't seen this high since January of 2020. So,
wow,
that's a bit of a jump. Not to mention, this earnings season has also been very positive. So, for the S&P 500 specifically, 77% of the companies so far have beat earnings estimates, and 76% have beat revenue estimates. So overall, super, super, super bullish. Also, we talked about this last episode, how Facebook dropped almost 25% in one day.
Yeah.
It's still sliding. I want to say it was down maybe 5% yesterday, and pre-market still very, very bearish. So not pretty.
I don't really know what to say on that. But
yeah. It's honestly, it's a sad sight. It's a great stock, but yeah, just that one bad earnings basically just destroyed it. I mean, overall, that's now almost like a 30% drop in over maybe 4 or 3 days.
Yeah.
So, I mean, whatever. It's a horrible overreaction.
Yeah,
it's a horrible overreaction. We just gotta wait for it to hit some support, and then hopefully it'll rebound. But for now, just keeping an eye on that.
Yeah.
I know I picked some up. I'm taking some losses right now, but honestly, I'm hopeful. I think it'll rebound.
Yeah, it'll rebound for sure. I mean,
Yeah.
Facebook's such a great company. I also love the people that are leading the company right now, and I like the approach that you're going for. So,
Yeah. I mean, it's aggressive. It's a lot of tech, but I mean, they're really pushing for really this new, I guess you could say even sector.
Yeah.
This is really, really, really big. I mean, this could be a lot of new capital coming in. This could be a really expanding sector that could bring in a lot of growth. I mean, there's a lot of money to be made there. Just gotta wait and see. Yeah.
Yeah.
Also, earnings. Peloton reported earnings today. Wasn't too crazy, but in some bigger news, they're actually replacing their CEO. His name is John Foley. There's been a lot of issues. The stock hasn't been performing too great. They're basically going to be replacing him with the former CFO of Spotify and Netflix. His name is Barry McCarthy, and he'll be taking over as CEO, while Foley will basically be stepping down just as a chair executive.
Right.
Not to mention, they are cutting down almost 2,800 corporate employees. They are going crazy. They're cutting down the number of warehouses it owns and operates, and they're really trying to be aggressive, and they're really trying to basically rebound off of their losses recently. So hopefully, Peloton is also hoping to stay independent. There were some talks about it being acquired by certain companies, but basically it's now stating that it's not going to that. It's going to stay where it's at. It's going to stay an independent company, and it's hopefully going to try to grow from there and try to basically take back from all of its losses.
Yeah, I don't know about Peloton. I mean, I don't have any Peloton. Some people are saying buy the dip.
I don't know about that.
Peloton stock has been so volatile.
Yeah.
And less people have it now since the pandemic's over. It's I don't know about it anymore. I'm done with Peloton.
Still, there were some really big names trying to acquire it. I mean, companies like Apple, Amazon, and Nike. I mean, these are name brand. These are really big companies. I mean, that's a big deal. But at the same time, if it's still a failing company, if its earnings are still horrific, it's really not worth it.
Right.
So, I mean, I remember people saying buy the dip back when they had that recall.
Yeah.
And it dropped maybe like $10. That was from 80 to 70. It's at 23 now.
Yeah. That's
something
bizarre.
absolutely ridiculous. But still, it's about, I want to say it's about up maybe 13% today because of this news of the CEO. So, I mean, in the short term, it might look pretty.
Right.
But in the long term, I mean, yeah, not too crazy. Also, tomorrow, Walt Disney is reporting earnings, and on Thursday, we have Coca-Cola. So keep an eye on that.
Some good big name brands.
Yeah. Tell me about your picks.
Yeah. All right. So my pick is Alcoa Corp. Now it's an aluminum stock. Now Russia is one of the world's biggest aluminum producers and traders in the world. And with Russia invading Ukraine, those aluminum prices are soaring. Right now, they're soaring right now.
Yeah.
And the price of aluminum has increased by 24% over the past 6 months. And the reason why prices soar is because there's less of it in the world. Right now, there's less aluminum, and that's why it's been soaring.
Yeah, supply and demand.
Right.
Yeah.
But for example, when gas prices soared, stocks also soared. They had a stable uptrend.
Yeah.
For example, look at ExxonMobil. Look at ExxonMobil's stock chart. They've been up 45% in the last 6 months.
That's ridiculous.
45% in the last 6 months. Also, remember the chip shortage. Look at all the chip stocks: AMD, Nvidia, Marvel. There was a chip shortage, and all the chip stocks had also a stable uptrend. So I love Alcoa Corp. It's an aluminum stock, as I said, and it's up 10% in the last 5 days. And I think this is a buy. This is a buy.
Yeah. Definitely. If it's that scarce, we saw like the post-pandemic, just the absolute surge in commodity prices. We had everything. Look at construction. We had things like lumber absolutely soaring in price. It was insane. It was almost, like 120%, something absolutely ridiculous. And these things were almost, unbuyable. It was ridiculous. You simply just couldn't afford it. But yeah, with this, and definitely that's a little more steady. It's not going to be, some sort of just, giant surge and then some giant drop. This seems like a more of a steady supply and demand, just steady increase in price. Yeah. And that could bring some serious cash.
If you look at Alcoa's stock chart, it's just been has a stable uptrend. The last year to date, next 3 years, last 3 years.
Yeah, that's a safe bet.
It's a safe buy, and it's also history has looking back at the chip shortage and all those gas prices, and it's just gonna go up, honestly.
Yeah, and aluminum is everything. That's just like a basic, building on a bunch of different types of things.
Cars.
Yeah, everything needs aluminum. Right. Look at chips. What is it? Ford with its chip shortage. That affected, that was one of my big picks. It went from $25 and now it's at almost 17 or 18.
Yeah.
Massive decline because of, it was a combination of things, but one of them was also the chip shortage, and they were having to close down some of the warehouses and close down some of the production of their cars. So this has a massive effect on everything. If we see a rise in price in aluminum, we can see a rise in price for everything else that relies on it. This is, kind of like a ripple effect.
Right. So yeah, Alcoa Corp is a buy. I bought some, but do you have any stock picks?
Not really today. I was thinking about saying something about energy, considering I was going to talk about the Russia-Ukraine thing as well. But right now, I'm a little hesitant. The NASDAQ has been taking massive
I could see why.
hits.
I saw that they're aiming to raise interest rates in the next month.
Yes, interest rates are going to be hiked up, and with an entire international conflict coming up, we should be a little bit careful. That could result in a little bit of a crash if it does follow through.
Could be going into some bloody waters.
Oh yeah, big time. All right, well I think it's time to wrap up.
That's all, folks.
In the wise words of Warren Buffett, the first rule of trading is to never lose money, and the second rule is to never forget rule number 1.
Thank you for watching The Exchange. Stay tuned for the next episode.